What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart and the bounce we've seen over here in markets ever since that capitulation that took place back there on Monday, September 11th, as confusion still rampages all over Twitter and X on whether or not prices need to go lower, or did people sell the bottom, as Bitcoin's price is now sits at $27,300, up about 10% off the lows, as the entire altcoin market is green today. Now, of course, this holding was a vitally important level for the Bitcoin price chart, as in all upward trends, the thing that has been of importance is consecutive higher lows, which we've still continued to do in here for Bitcoin and did just last Monday. Now, I've often talked about how this moment in time really reminds me of September of 2020, when market participants all got shooken out of the market here, as we had been trending out ever since the C19 crash, had a very abrupt liquidation that took place throughout the cryptocurrency market, and participants thought the same thing as what we had in here, that we would go tumbling down. We've looked at that chart in many aspects. I've shown it here with Bitcoin measured in gold as well, that in that time period, we had something similar to what's going on now, right? Where we just kind of consolidate, break up, and then boom, right back into here, but without setting a new low, right? Very similar to what we actually have happening in here currently right now, and how our price action has maintained that, and the behavior of the market nearly identical to what it was back then. Now, we've talked a lot about the Dow Jones Industrial Average, the stock market needing to see things like that roar up with it too. Bitcoin, hate it or love it, tends to trend with whatever's going on in broader markets at the same time. Funny enough, taking that time period from 2020 and applying it to where we are currently right now, as I showed in Markets in the Morning today, that our price behavior currently right now, we put it on a smaller time frame, you can see even over here in the Dow, kind of setting itself up for a move up. Again, another confluence to really that time period before things got pretty wild throughout markets. Now, should the Dow go just break down and go take out 33,600, hey, all bets are off. We now have lower lows in the stock market, and likely lower lows coming in for Bitcoin. But as of right now, we've made those correlations there between Bitcoin right now and how similar these price periods are in time compared to each other. I've even had people ask, like, versus M2 money supply, and you can see it in there as well. But last week, obviously, we had a lot of people looking for $23,000, $20,000, going back to the lows again, or, even, of course, you got the 12K callers still out there. Every time the market pulls back, they get very loud. But I wrote a newsletter about this last Friday that, the capitulation has actually already happened, and the Bitcoin block reward and 4-year cycle theory actually demands that this current price level does hold. And so I think a lot of confusion that's happening right now is just recency bias. We're kind of going back to 2020 and saying, hey, we did it in 2020 where we went back down to the lows again. Why can't we do that again currently right now in 2023? And again, it's going back to say, well, there's kind of a reason why we did that. That's typical wave 4 consolidation before you have your 5th wave of a complete super cycle in here. We've actually now done this whole thing twice, and everything that happened in 2020 and 2019 is exactly like we did in the previous super cycle prior to that. And in this time period, that's what we had going on. And the thing to look for right now, if you're even considering the idea that Bitcoin could continue up higher, and if you're going to maintain that price always goes up, money printer go burr, the appropriate correction to be looking towards is really the corrections that come after super cycles are completed, not wave 4 consolidations that we typically have. And so when we go back and we look at these recoveries that happen in here, we know that price behaved like this, right? We know that our endings have come in just the exact same way. We know that the breakouts all happened at the same time. I've shown this in so many videos that we could time it, where even if you time your top of the market to happen right here, right in April 14th, we then even go breaking out at the same times. And that price is actually right where it should be at this time. But when you go back and you look at these recoveries, if you're going to have a long-term bullish thesis for Bitcoin and think that it's going to go up, I think a lot of the misconception is, hey, it's going to go to 12K, I'm going to buy it, and then it's instantly going to shoot to the moon after I do it. But that's not how these recoveries end up playing out. They actually all act pretty similar in here. And this was something I really talked about in the newsletter, to say that Bitcoin typically stair steps up. that we're typically going to work a range, break from the range, back test the top of the range, and then scoot to a new one, back test it, and scoot to a new one. And that has been the price behavior for each of these recoveries. And so the consistent behavior on a recovery after a completed super cycle is to stair step, range, stair step, back test, range, stair step, back test, range, stair step. It's what we did all of 2012. It's what we did all of 2015 and 16. And then we say, well, why not in 2020? Why'd we do something different? It's because one, we weren't finished with a super cycle. And two, like we just discussed, in each recovery, every previous range had been back tested. What is different about 2020 than about those time periods? Well, it never back tested its range. It went in for a full-blown breakout with no back testing, as we see happen in every single one of these. I'll take this off for a second. Range, breakout, back test. Range, breakout, back test. Range, breakout, back test. In 2019, we ranged for 5 months. We broke out and just kept going until C19, and we back tested. And so, as we know, back here in 2015, we ranged in this area for 293 days approximately. Down here in 2022 to 2023, we ranged for 273 days. Then broke out, ranged with back tests. This is very normal recovery behavior for Bitcoin. But what's not normal behavior, which I think everybody is really looking for, is for Bitcoin to kind of go down here and then come up, or to go down here and then come up, or even go down here and then come up. Every recovery for Bitcoin was a backtest of previous ranges, then eventually moving higher. We've already done that backtest here. Now for Bitcoin, we've already ranged, built supports. We've seen capitulations now happen. We've seen negative news narratives come out at the floor, right? This is where the SEC goes after Binance and after Coinbase. We see retail investors capitulate, thinking they're front-running FTX, dumping their assets on the market. Heck, we've even seen liquidations happen in the market that exceeded FTX to get back down to the bottom of this range. So we've seen leverage flushes, we've seen retail capitulation, we've seen negative news narratives, we've seen everything for us to do what we typically do, and that's hold the support level and stair step up. Don't believe me? Go look for it yourself. Go through all of them, and that this circumstance that happens in here, not only is it consistent with what we do in a range 4 consolidation, but it's actually a circumstance in which we had not backtested the top of a previous range as we did in all previous circumstances of each recovery as outlined here. We spent a lot of time talking about higher lows needing to be set here for Bitcoin. And the reality is, even looking at it from that aspect of, hey, if we head down here and we go to $23,000 or $22,000, is that consistent with any type of Bitcoin recovery? I would say no, it's not consistent with any of them. The only miracle you could hope for is that if it did something like that, it would just shoot right back out of there and it would just be some type of a wick or something. But for a previous range to be cleared and then be lost again hasn't happened in any of Bitcoin's recoveries. I think that's one of the things that just people didn't really realize going on last week, even though we harped on it so many times. Needs higher lows, it needs higher lows. That's an ultimate warning sign if you take out that low and go below 24,700. Because not only would it be inconsistent with all recoveries Bitcoin has done, it would also be inconsistent with how everybody talks about block reward halvings coming up. You know, we're like 220 days away from the block reward halving. That if you did that, it would also shatter the whole block reward halving theory and then massively open up the door to the thing we've been talking about with Ethereum. We've been talking about this for years, that the setup that you've had here in Bitcoin and compared to Ethereum and then a bounce to come in here, that the moment you take out a previous range, which would be inconsistent with all of Bitcoin's previous recoveries, you're then opening up the door that something like this has now happened in here for Bitcoin, and that the 3 super cycles that it has completed in here now are the completion of a major grand super cycle Elliott wave to take you much lower, maybe not below 1,000, but probably into the 2s or the 3s. And to have cheered for anything below $24,700 would have actually been a break of supports. And so the absolutely great news is, boom, it held higher low, just as it has in 2012, 2015, and technically speaking, even over there in 2020, which was a range backtest. But again, I think the important thing to draw from this too is to say this is not 2020. It never has been 2020. And we've talked about that since the very beginning. This is not your 2020 market happening in here. 2020 was very specific to its time, very specific to its location. And it makes total sense why Bitcoin did not go as high as people anticipated. People were thinking $100, $200, $300,000. It didn't, because it was the end of a super cycle. And so when we go back to 2020 and we're referencing this and saying we're going to repeat this because of recency bias, why not look at how we've typically behaved in recoveries, and especially after super cycle behavior? What did those recoveries actually look like? And what they all do is they stair step. They range, breakout, backtest, stair step. Range, breakout, backtest, stair step. And the great news is we have it, and we also saw capitulation. We saw screaming for lower prices. I even had people in the chat during Markets in the Morning last week. They're coming in here screaming for it. That's typical behavior. And to understand like bull trends and bear trends, typically in a bull trend, traders, investors, retail, they're all very scared to buy the dip, that it's going to go lower. But in like bear markets, whenever a dip happens, they're all screaming, buy the dip, buy the dip. But in uptrends, the shakeouts are constant. Every dip is perceived as this is the doom one. This is the one that's going to happen, send it all to Goblin Town. But fortunately, to this point, it's holding. We have the stock market acting right on cue. Wednesday, we have the FOMC meeting where the Fed is expected to pause. The market has priced it in a 99% probability that the Fed will be paused. The overnight reverse repo continues to plunge, now down to $1.4 trillion after peaking up there at 2.5. Which, as we've shown, the moment that facility opened up, that is when Bitcoin started crumbling down. And the second that thing reversed, it's where Bitcoin started pulling its way back up. So this thing is still just plowing to the downside. Money funneling out of the Fed. Pause expected on Wednesday. Stock market looking good. And well, hate it or love it, Bitcoin's still right on track. So keep your eyes open for volatility this week, as it is FOMC week. There's always volatility during these weeks. Hopefully, by the time we get to the end of the week and the market has digested everything that the Fed has said, well, structurally, it all says we start creeping our way up. Hopefully, we see that by the end of the week, and hopefully crypto follows along. Otherwise, Bitcoin held support, took back the previous 3 weeks in last week's candle, and hey, continuing it so far this week. And hard to believe this thing isn't even 24 hours old yet. Otherwise, just to sit and wait and see, as we have now continued to hold that higher low, as we cheered for, hoped for, we got it. That's consistent with all recoveries for Bitcoin and an optimistic thing to see. We'll check in on it again this week. Otherwise, the shift of focus is going to be about the volatility around FOMC and about rate hike, rate cuts, rate pauses, and forward guidance. We'll be live streaming that meeting on Wednesday. It's, I believe, at 2 p.m. Eastern time. Otherwise, I'll catch you guys in Markets in the Morning and the rest of the videos that I put out this week. On that note, though, we're going to go ahead and wrap this thing up. You can check out that in-depth newsletter that I wrote over there on Substack at blockchainbacker.substack.com. Of course, you can check out bcbacker.com. This is a website and a course that I've put together with over 40 videos and over 11 hours of content, deep diving into the cryptocurrency market, looking at historical behavior of the market and explaining how this market has worked throughout the past. Of course, teaching you how to set up your own charts and your own indicators within CoinTrader Pro and TradingView, talking about different structures, distribution, Wyckoff method, Elliott wave theory, a lot of the historical behavior, and a lot of additional stuff that I've learned getting through this market, especially with crowd behavior and emotional management. You can check this out over here on bcbacker.com. Otherwise, guys, I'll catch you in the next one. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.